Hello, Karsten versus the market here. So this video is about crude oil, gasoline, natural gas, and market funds with which you can trade these commodities. So first of all, gasoline prices at the pump are about 60 to 70% based on oil prices. Now, a couple years ago, with the pandemic and everything, oil was at about $40 per barrel, and even less. However, with everything that's happened since then, this January, as of 2022, oil was at about $70 to $80 per barrel, and then in February, it was up to about $90 per barrel. Then earlier this March, after the war with Russia and Ukraine began, it was ranging from $105 to $125 per barrel. Then recently, with attempts to help it, and also with the markets figuring that we already were at the worst of it, there was some cooling to about $97. This chart here shows where Market Insider offers tracking of crude oil prices, which is nice. So USO, United States Oil, is a pretty stable, I think non-leveraged fund with which you can trade the value of oil, at least in regards to the contracts that this fund holds. Now UCO, however, it more directly and day to day follows the price of oil. So very frequently, if oil goes up or down, UCO goes up or down, and I believe it is a leveraged fund, so basically it can go higher or lower, which means you could have higher gains if you're right, or worse losses if you're wrong. Now the reason I use the simple chart for UCO here is to show how well the inverse fund, SCO, mirrors it. Basically, SCO goes up when oil goes down, so it's basically the opposite. Of course, there's other ways to short. You can sell shares, or you can buy put options, but while UCO can be bought when you think oil is going to go up, SCO can be bought when you think it's going to go down. UGA is United States Gasoline Fund. It's pretty interesting and basically correlates to the prices or value of gasoline. Now UNG, United States Gas, this is natural gas. It's pretty much following the value of natural gas, so like it may be higher in summer or winter when there's more demand for natural gas, and then it may be lower in spring and fall when there's less demand, and exactly how high or low natural gas goes can depend on other factors. Aside from the markets, there's weather to consider. Now BOIL is like UNG, but BOIL is leveraged, and it's basically similar to UCO, except BOIL goes up or down when natural gas goes up or down. And again, I use the simple chart to show how well its inverse fund, cold, mirrors it. Cold goes up when natural gas goes down. So again, like UCO and SCO, being the bull and bear funds for oil, BOIL and cold are bull and bear funds for natural gas. So just a few notes, natural gas and gasoline are different, and I'm sure that's self-evident with this video, but it's important to point out, especially for a beginner, so they don't mistake which fund they want. Oil, gas, and gasoline all relate, but are also different. And also, as noted, some funds are leveraged, and others are not, and it's worth being sure you know which one you're buying, so you can decide if you want it or not, and it's worth looking into so you can decide if it's for you or not. With all that said, I figured this video might be pretty relevant to the times right now, and hopefully it's useful, and with that, have a good one.